more profitable? Well, that's exactly what we're diving into today. Today, we're going to talk about the journey to better money. And yes, we're going to talk about getting credit lines to be able to make that happen as well. But we're also going to talk about a lot of things that maybe you haven't even thought about to be able to make significantly more money in your business that require very little moves. Instead of really big moves like a lot of entrepreneurs focus on to make a lot more money, there's very little things you can do to make considerably more money. And that's exactly what we're going to talk about today, is the journey you should be taking right now to better money. Look, everybody wants to make more money in their business, right? But the reality is that a lot of people never manage to make that happen, right? A lot of people try and want their business to make more money, but it never makes what they want it to make. And so as a result, they spend months, years after year trying to get their business to generate the kind of profits they want. And let's be honest, as entrepreneurs, that's what we want. We want our business to be really profitable because that's money we can then take out of the business and reinvest part of it for growth, but then take the rest out to have the financial freedom that got us into business to begin with, right? We didn't get into business to work 80, 90-hour weeks. We started our own business to be able to control our own destiny, to be able to have financial freedom, to be able to get to our financial end goal faster. But we can only do that if our business makes a lot more money. So how do we do that? Well, here's some of my best tips that I found building an 8-figure business on how to get there, on how to be able to make better money. First of all, product and service innovation. It's very important. Whatever you are doing, you need to do better, and you need to continuously find new ways to do it. So let me give you an example. And I think it was Mark Cuban that says this, and I love this, is that you have to get up every day and fight with the attitude that everyone around you is trying to steal everything you have. And that's very true. In business, you really have to get up every day, and you have to keep growing your business and innovating in your business as if everyone around you is trying to copy and steal what you're doing, because inevitably they are. When you get big enough, then everybody else will try to sue you. They will try to dupe what you're doing. They will try to steal what you're doing. It's mind-blowing to me, the lack of ethics that people have at building an 8-figure business, of people that just come in and try to steal things that we spent 7-8 figures creating and just make it their own. It's really astonishing that anybody thinks they can get away with it, but they can't. And unfortunately, it requires a lot of money from you typically to fight it. So the way around this is you have to constantly be innovating. So Credit Suite, for example, just rolled out a brand new software product this year. Our software product is called Fundability, right? It's the newest and best way to build business credit, get financing, and improve fundability. But the reality is there's still people out there using software that we had a hand in creating 2000. I mean, 23 years ago, people were still taking our very, very, very old software, licensing it, and still using it. So even though our software 23 years ago is still in the space being used, and we've had many iterations since that are still in the marketplace, we still are innovating, bringing out brand new technology that's different than what anybody else is doing. So as an example of why, our old, our phenomenal but older system to build business credit allowed people to go in and just kind of copy and take a lot of the information, which they were doing. So we innovate and create a new solution that is basically very subjective to the user. So you only see business credit and loan sources that you can get approved for, not the stuff you don't qualify for example. So this is something that's never been done in the space, and that is just a way of innovating. So you have to look at your products, you have to look at your services, whatever they may be. In my world of software, what should you be doing? What could you be doing to innovate, to make those products better, to make those services better, to serve future needs of what's going on? When we look at the biggest falters per se in business, we see people that didn't do this very well, right? We see taxi companies, all the complaints they constantly had. I don't know about you, but I go to the city quite a bit in New York. And what I don't like about taxis is they still haven't figured out that I kind of want to know my total before I get in that car, right? So it's interesting because even though they fought this fight to fight off Uber and Lyft, the reality is the things that people don't like about taxi services, they never made changes on. They still never innovated at all. I mean, finally, there's an app you can use to hail a cab and to actually pay. But again, a lot of the things that drove us to Uber away from taxis, taxi companies still haven't figured out and been able to innovate, right? We see this exact same thing with hotels, but some hotels are starting to innovate. Well, I see more and more hotels buying and building entire neighborhoods of homes. They understand people would like to have a home versus just a hotel room. So this is innovation. You have to see what's coming. You have to see what changes you can anticipate, and you've got to be building products and services that are for the future, that constantly keep you above what's going on and on the edge of innovation. Otherwise, people are going to come in and steal your lunch. People are going to come in and have more money than you. They're going to come in with better ideas. And since you're so focused in the short-sighted area of running the business, outside people can see things you don't see and come in and out innovate you. So you have to constantly be innovating. And by the way, if you're just coming in, tell me where you're coming in from. Give me your business name, and I'll give you a shout out here right on the actual live stream. The second thing is market expansion. So there's one of the best books I've ever read, and I read a lot of books, like a book a week, is Blue Ocean Strategy. And if you haven't read Blue Ocean Strategy, I highly, highly, highly suggest you do, because Blue Ocean Strategy is a game changer on how we view expansion of our businesses. And here's what I mean by that. What Blue Ocean Strategy says is that a normal business owner is really focused on the red ocean, like the little world they're in, and getting as much market share in this little world that they're in. But a blue ocean thinker isn't confined to the market they're in. They think well outside of the market they're in. So let me give you some examples. So we're familiar with the circus. Okay, if some of us are old enough, we remember the old circus with lion tamers and all kinds of stuff that doesn't exist now. Then you see places like Circus du Soleil. Circus du Soleil came in and they changed the whole way that circuses were viewed. They brought a whole new level of entertainment, and in doing so, they attracted all these different people into something that was once kind of dying a slow death of circuses, right? And now we see these big circuses at Disney and everywhere else that you can think of. So again, they revitalize that by saying, look, this old market focused on like this age demographic and this limited amount of entertainment for this limited group. But if we create all of this and acrobatics and all these other things, then we can expand out our reach. I'll give you another example, and you could probably relate to this too. During COVID, there was a lot of changes, right? So one of the changes I saw was there was a truck that came around playing a little bell like an ice cream truck, but it was a cupcake truck. It was my local favorite cupcake shop. And again, since COVID had everybody shut down, what they decided to do was they took their catering van, they opened the side of the door, they put like a makeshift little container there where you could see the cupcakes, and they went like an ice cream truck selling cupcakes. Now, here's what's brilliant about this. If you own a cupcake shop, you are kind of limited in the volume you can do because you have a small geographic area of people that will ever shop at your location. So if you're a cupcake shop, you expand by getting more real estate, by expanding your real estate store into other areas. But this changed the game, because if all of a sudden they could put a truck on the road and drive through those neighborhoods, then they don't have the constraints of opening another shop, right? Another cupcake shop is expensive. You have to sign a lease. You have to do the build out. You've got to be able to supply the staff and everything to run that. But if you just put a truck on the road with one person selling cupcakes around neighborhoods, then all of a sudden they opened up this whole blue ocean. They can have 100 or 200 trucks out there and 10 or 100x their business without the constraints of opening new locations. So there's a million examples of this, but this is what blue ocean therapy is, or blue ocean strategy is. And this is what market expansion is all about, is what can you be doing in a blue ocean to be able to expand your market? Meaning, if your product and service is really focused on one demographic, are the things you could do to attract another demographic, for example, right? And I got to tell you, Disney does a really good job of this. One of the best jobs I've seen. I watch a lot of Disney films, right? I've got a 12-year-old and a 14-year-old kid. So as they were growing up, I watched almost all the Disney films during the time of them growing up. So as a result of that, I've seen Disney films progress. And if you look at a modern age Disney film now, they're brilliantly done, because the comedy, the little drops they put in there are so meant for adults. There's so much funny things that we can relate to as adults in Disney films that the kids don't even understand. It's over their head. But they drop all of these nuggets in there to pull us in, so we're actually watching and we're enjoying the shows that were there actually for our kids to do. So you got to look at what you can actually be doing to expand your market. What are the things you could do to find your blue ocean? The areas that you're not fighting with your competition in your industry, but all of a sudden you're expanding outside of your industry and finding these whole new area to go market to that's untapped, that gives you basically a no ceiling to your ability to actually be able to scale your business. And Agile, I think it's Agile. Thanks for coming in. And Till Young, thanks for coming in as well. CJ Peterson, I appreciate you coming in as well. Well, should I put a time frame on my financial goals, or is it just a distraction hanging over ahead? Well, look, I think any goal should have a time frame. And everything I've studied on this, and I'm sure you studied a lot, should say, here is my goal, not even financial. Here's my goal, and here's the date that I want to accomplish that goal. And you should do that on a smaller level, not just on your financial level. You should do it on a physical level, on a health level. You should do it on a business level. You should do it on a relationship level as well. So yeah, setting those goals is one thing, but setting a time frame of when you're going to accomplish it. I'm going to save this much money by this time frame. Well, that gives your mind a very specific thing of what you're trying to accomplish. You're trying to save X amount of money by Y amount of time. Then your brain can start to process that backwards to help you develop the plan to actually get there. So great question, CJ. And yeah, the answer is you should really set a goal, and then you should also set a time frame of when you're going to accomplish that goal. And Mike, thanks for coming in from St. Louis. I appreciate you saying hi. So again, some things. Product and service innovation. We have to be innovating. We have to be thinking about what our market wants. We have to be thinking about what can help our market that they might not even know yet, right? So Henry Ford said that, hey, if I asked people what they wanted, they just say they wanted a faster horse and carriage. But right, they didn't even know what they wanted because they didn't know that it was even possible to have a car, right? Same with Steve Jobs. They didn't know about iPad or iPhone. They didn't. If you ask people what they want, they're not going to tell you because they're not innovators. They don't think that way. So you should, again, be innovating, be thinking about the next thing to come about to help your market, and be expanding into blue ocean areas using Blue Ocean Strategy. Great book. To actually be able to do that, to expand into areas where you don't have competition. The next thing is you want to be upselling, you want to be cross-selling. And this is one of the biggest mistakes that I see most business owners make. A lot of the people I coach make the same mistake. They're selling a product, they're selling a service, and there's not an upsell and there's not a cross-sell. So let's talk about what an upsell and a cross-sell is. Let's talk about what an ascension model is. So ascension model or an upsell is when you're basically selling something at one price point, and then you're kind of stepping them up to higher price points. So let me give you an example. So Credit Suite has a funnel built where somebody comes in and they get a free guide to build business credit. The next thing they see is a very long worded page that sells this really phenomenal business credit blueprint, basically for $7 only. It's a training on how somebody can get $250,000 in business credit, and all of these bonuses worth like $1,200 that somebody's getting for $7. So tremendous amounts of value and very small price point, $7. So why do we do that? Because the psychology shows that if somebody spends money with you, they are 70% more likely to spend more money with you. So that means the hardest part is to get somebody to pull out their wallet and pull out that credit card and enter it in. Once you get them there, then they are significantly more likely to be able to buy something else. So why does this happen? Well, Russell Brunson calls this the big domino. Everybody calls it something different, but it kind of comes down to this. Your customers typically have one primary objection of why they don't buy from you. Now, I have personally found that most of the time, the objection in business is it won't work for me. Whatever you're selling, the product, the service, people's objection is that won't work for me. It won't give me the result that it gives other people, right? And what I mean by that is that if people come to us and they buy our fundability system to build business credit, then they're very inclined to look at it and go, yeah, that might work for a truck driver, but it's not going to work for a credit repair company. And I'm a credit repair company, it's not going to work for me. Whatever you sell, you've got to figure out what your customer's primary objection is. And typically the primary objection I have experienced is, oh yeah, but it won't work for me. That's the objection you have to overcome. Well, if you sell something very cheap, like a $7 product, and you've broken down that barrier, then now them spending the $7 isn't what matters. What matters is you broke through the primary objection of this won't work for me. And so now as a result of that, now you've overcome that primary objection and sold one thing. The next question is what are you selling after that? Now in that funnel, we go from a $7 for that $7, then we go to like my book for $10. And again, like 70% of people that pay $7 buy the book for $10. So they buy something for $7 and they buy an upsell for $10, right? That's like 130% of what they originally bought. But again, the barrier of it won't work for them is broken down. So now they're inclined to buy something else. Then the next thing that we sell them is like an actual course on building business credit. And we test prices between $100 and $200. But again, a portion of those people buy as well. This is an ascension funnel. This is where we're actually having upsells. We sell something for $7, a business credit blueprint video training with bonuses. Then we come in and sell the next thing, a $10 upsell border form bump to get my electronic version of my book. Then the next thing we sell is a business credit building course with all of these different bonuses that come with it, right? That is an ascension funnel. That is an upsell. Now, again, you can upsell anything you want, right? So for example, if you enroll for Credit Suite as a partner, well, then we have an executive program where you can make a bunch more money on every customer you get funding for. So you have to think about natural upsells of when people buy from you, what else would they buy? Now, here's the thing. Sometimes it might be your products and services. Sometimes it might be others. Sometimes you may be an affiliate for things and you might not be selling your own thing. Your upsell might be from somebody else that you're representing. It's like an affiliate relationship. So maybe I have a business credit building kit, but I don't have business credit building software. Of course I do, but I'm giving an example. And then that person comes to Credit Suite and we make them an affiliate and their upsell is our software since they don't have software. So that's an example of how you can have an upsell that's your product or service or somebody else's product or service, but you should be upselling them to something else. Now, a cross-sell is kind of where you're selling something similar. It might not even be similar price or similar to what you have, but it might not necessarily be an upsell. It might be in lieu of them buying what it is they're buying. So, hey, I've got a business credit building kit. Oh, you don't want to buy that? Well, here's a business credit building course. So instead of buying this that has that, it gets you the result of building business credit. Here's another solution that helps you get to the result of business credit. So a cross-sell is kind of something that different that will help them kind of get the similar result. Or there's even a downsell. Hey, you wouldn't buy my business credit building course for $200. So what if will you buy this thing for $50? Will you buy a business credit building kit for $50 because you wouldn't buy the business credit building course for $200? So if I'm trying to sell somebody a business credit building course and they say, no, I don't want it, then I might send them to a downsell page that says, hey, what about this business credit building kit? It's only $50. And then somebody might buy it because there's coming up some kind of price resistance at $200. But the bottom line is every customer you sell, you should have multiple things to sell them. You should have things that are cheaper, things that are more expensive, things that do the same thing, but maybe a different way. So I'll give you an example. We find that if somebody goes through our webinar, on how to get $250,000 in business credit in 6 months, they know enough stuff about Credit Suite to want to speak to an account executive and buy. But here's the problem. A lot of people don't want to spend 90 minutes watching a webinar. That's the world we live in, right? People have very short attention spans. So we took the webinar and we broke it up into 5 pieces and we made it into a 5-series mini course, right? Then we took the webinar, we broke it down to its basic format, and we did a 15-minute mini webinar. So the content is very much the same. One is a 15-minute webinar. One is a 90-minute webinar. One is a 5-series video mini course, but the content is basically all the same. It's just we're giving people a different way to absorb that content. Maybe they'll listen to it on the podcast. Maybe they'll watch it on YouTube. Maybe they'll click on a video in our email sequence to watch our 15-minute video. Or maybe they'll grab the 5-video mini course. But they're still consuming the same information. It's just what way we're actually going to show it to them. So again, upsells, downsells, cross-sells become essential. If you are a one product or service company, you have serious problems. And other outside investors like venture capitalists are not going to want to invest in a business that's a one-trick pony that has one product or one service. So you need to be thinking about what else you could sell. What could you sell that's more expensive? What could you sell that's cheaper? What's another add-on or bolt-on product to the thing that you have? So if you look at Credit Suite and just in the next month, things we're getting ready to roll out that have a price. A how to get grants course, how to get money through venture capital course, how to get money through crowdfunding course, right? So these are all courses that we're adopting here. If you come into our email sequence and you say, hey, Ty, I need help setting up a virtual address, I'm going to click on the link that you sent me to get help. Well, we have an affiliate relationship with Alliance Virtual Offices. We don't offer virtual offices, but every time somebody gets a virtual office, we get paid on that. So these are perfect examples of other things that we sell and from ourselves and from other people to make money. But here's why this is important. Because if somebody comes in our funnel and they grab that free guide on building a business credit, then they come in and some of them grab that $7 business credit building blueprint. And then some of them take the upsell for $10 for my book. And then some even if it's a small portion, people go grab that course for $200. Then they come into our email sequence. Then some very few people buy the grants course or the venture capital course. Then what happens is within 2 weeks of somebody opting in and grabbing a guide and being in our email sequence, we basically get back nearly 100% of our ad spend. So if I spent $10,000, let's just make up stupid number, to get 10,000 leads. And those 10,000 leads, some buy my $7 product, some buy my $200 product, some buy my $10 upsell, some buy my course for $200. Well, then what happens is now 2 weeks later, I've made $10,000 from those people that opted in, and I paid $10,000 to get. Now my ad cost is free. It costs me no money to now market and advertise. And then I can sell my primary product and service, which in my world is software. And you know what? I don't care if 1% buy or 10% buy. It doesn't matter to me. It's all profit because all the cost of acquiring that customer, I already got back on all those upsells, those downsells, those cross-sells. So this is why you want to make sure that you're doing upsells. You want to make sure you're doing cross-sells. You want to make sure you're doing downsells as well. You want to have multiple products and services that you sell, whether you're yours or an affiliate's. And again, upon exit page and the first week or 2 weeks of them opting in to get something from you, you want to be selling those things to try to get back as much of your ad spend. Because when you hit the holy grail of I make as much as it costs me to bring the lead in, then you could spend $1 million a month without really spending anything because you get all your money back. And then all those leads come in to sell your primary products and services. It's how you can really build a highly profitable business. Now, speaking of this, the other thing you really want to consider is pricing. Look, the majority of us underprice our products. I would say about 85 to 90% of us are underpricing our products. So there's one of the best books I've ever read, and it's really a crazy book. It's this obscure book, and I'm going to pull it up for you right now. It's called Confessions of the Pricing Man. I mean, this is like an old school book. It's like this guy has, I'm going to pull it up here, Confessions of the Pricing Man. And this is an old school book. This guy is like black and white cover. I don't even know when this thing is from, right? But this thing is phenomenal. Like I read this, I'll never forget where I was. I was in Disney on vacation with my kids staying at the campgrounds, and I read this book, and I thought it was one of the smartest books I've ever seen. And this thing's an old school book. I don't even know if it tells us how old this book is, but it is an old book. But the reason I love it is that I don't know about you, but I have never before ever knew there was a science to pricing products and services. I more than likely, like you, just made up whatever my products and service pricing was, right? I never really put a lot of thought into it. But this book actually shows you there's a science to actually pricing, right? There's a science to pricing. And if you understand the science of pricing, you'll stop underpricing your products and services. I'll tell you a story. When I started a credit repair business, I started at $99 a month. I went to this first event called the Credit Repair Boot Camp, and I started walking around and talking to people, and I realized that most people had very little knowledge compared to what I did. Now, I thought I didn't have a lot of knowledge until I talked to these people, and these people were all charging the same money as me, and they knew a fraction of what I knew. So I went home that night, and I doubled my price. Now, stop for a second. If I tell you that, you're probably going to say, Ty, I'm not going to double my price. There's all these people that can't buy. I agree with that. So let me tell you how to do it the smartest way I've ever seen. And I'll tell you how I did it and how it changed my life forever. What I did was instead of just doubling my prices to $197 instead of $97 a month, what I did was I rolled out a secondary product level somebody could buy. Somebody could still buy at $97. Somebody could also buy at $197 for a premier level of service. So this one was just disputes to the credit bureaus. This one was disputes to the credit bureaus and direct to the creditors, right? So I gave people a choice, and this is how I found is the easiest way to raise your prices. Don't raise your prices. Leave the package you have, but roll out a premier service and see what happens. And here's what's crazy. 60%, 60 took the upper package. That's how much I was underselling what I had. So when I gave people a choice of $100 and $200 a month, 60% chose $200 a month. But here's the crazier thing. Overall, the overall percentage of people that bought also increased. So what I mean by that is that when people saw that I had an upper level service, even when they couldn't afford it, more people still took the lower level service, but because I had an upper level service, gave me more credibility. And that was really interesting to me. So for example, my closing percentage went from 15 to over 20%. So every 100 people I talked to, I closed an extra 5 people just because I doubled my price, because the people that couldn't afford the upper price still bought the lower price, but it made what I did worth more valuable because I had a higher ticket item. So you should be raising your prices realistically. You have a limiting belief on how much you think people will pay to buy your product and service. But the question is, have you ever tested that? Have you ever went out and just started raising your prices to see at what percentage your closing percentage starts to decline? At what amount? I mean, all of a sudden you're selling something for $100, raise it to 120, raise it to 130. What breaking point do you start to see the percentage of people that buy drop off? You'd be shocked. You could probably raise your prices 20, 30, 40, 50% and see no drop off and the percentage of people that want to buy from you. But you're never going to know unless you test. So you should be testing pricing. You should be looking into like a book like The Confessions of the Pricing Man to understand pricing strategy. And then you should be rolling out multiple different pricing levels and options, because that gives your overall product line more value and gives you more credibility. You give people a choice. I found that people like to make a choice. If they make a choice, they take more ownership of the decision, meaning your retention is higher, and you'll sell a lot more stuff just by giving people a higher value price as well to choose from. And Jim says, hey, I had my video stream froze. So Jim, hopefully you got that fixed. CJ and multiple profit centers are pivotal. Liddell gets, and I appreciate that. Also, collaborations. Okay, another important way to be able to make more money in your business is to be able to create collaborations. These are everywhere. And what I mean by collaborations is who else has your same audience you could collaborate with to maybe do some cool things together. I'll give you a simple example. One of my very good friends is Ray Perez. He's known as the global #1 branding expert. Ray's audience is my audience. So what I do is Ray has a boot camp that he charges $1,000 for. And Ray lets me take our paying clients that enroll during a challenge or a webinar. I give them that $1,000 boot camp for free. Now, Ray legitimately charges $1,000 for the boot camp. And then in the boot camp, he sells his expensive mastermind. So he says to me, Ty, I want your best clients. I say, well, then give me your boot camp for free. I'll give your free boot camp to my best clients. They will go to your boot camp and you will then sell them your mastermind. So this is a way of collaborating. I get something. I get $1,000 boot camp to give away to somebody as an incentive to get them to buy my products and services. Ray wins because he's taking my best clients, the ones that are paying us thousands of dollars. He gets to talk to all those people, gets them in his boot camp, and gets his chance to sell a $25,000 mastermind. Everybody wins. Now, I can give you a lot of examples of collaborations, but again, the idea is who can you collaborate with that has a similar avatar of you? Then if you come together and maybe mix and match your products and services, you can sell a lot more of. Invest in your employees. That's one more thing you could do to be able to get better money. Invest in the training. Invest in retaining them. Invest in finding the right employees. Make sure you have personality DISC assessments done of your employees. Every employee at Credit Suite, we have a DISC assessment for. We know what their personality assessment is. And that means our best employees, we can actually look at all of their tests. And when we go to hire new people, we want people that are similar to the way they tested. So it gives us like a litmus test of every one of our team members so we can go find more of the ones we like, and we can avoid the weaknesses and the weaknesses that we don't like. So again, finding, onboarding, hiring the right people. I mean, I don't even have the statistics, and I should have come into this with it, but it's staggering how much money you lose every time you lose an employee. The time you put into it, the energy, the money you put into training them to start over, like a Navy SEAL was millions of dollars. Okay, in the Air Force, and then not just in the service I was in, but in all the services, when you go to get out, they will pay you money to re-enlist, because that money they pay you, sometimes it's $50,000 or $100,000 to re-enlist. It's a fraction of what they would spend to bring somebody else in and teach them what they've already taught you from scratch. So again, retaining employees, finding the right employees, using assessments is very important. Thinking about what other bonuses and incentives you can have, 401k match, health insurance, any of that stuff that makes sense for you financially to do, because again, people are motivated by all different kinds of things. You see, you and I as entrepreneurs, we think people are motivated by money because that's the way our brains work. Like, it's money. But when we start asking our team members, a lot of team members said, no, I don't want a bonus of cash. What I want is an extra week off, for example. And that's shocking to us. We never thought about that. So when your team member gets hired, ask them what motivates them, what incentivizes them. You're going to be shocked. Some may say money. Some may say time off. Some may say appreciation. And all of a sudden, now you've got an Employee of the Month plaque, and you give a week off to somebody as a bonus for this, and a money for a bonus for this. You've got to meet your people where they are, and they're all incentivized different ways. So find the right people by using different kinds of DISC assessments and any kind of test you can find to bring on the right people. Make sure you have the right training and onboarding. Get them into your culture. Get them to understand what you stand for, to get behind your mission, value, and purpose. Okay. And then also find out what motivates them. So when they do a good job, you can meet them where they want to be with the incentive that will actually incentivize them. And the next thing is make sure you all obviously have the cash you need to be able to do what you need to do in your business. Look, you should never stop applying to get money unless like you are way debt heavy in your business. You should always be building business credit and using business credit to get credit lines in the business name without a personal guarantee and credit check. Why wouldn't you? Because by doing that, you make your business more valuable. If there's two businesses and one has $250,000 in business credit available and the other has none, that one with $250,000 in business credit is always going to be worth more valuable. Your business credit without a guarantee and credit check goes with your business when you sell it. So you make the business more valuable when you go to exit, but it also helps you grow the business. It helps you take advantage of opportunities. It helps you see competitors that are getting ready to sell or buy another company that has the perfect addition to your products and services, or go into a major expansion, or buy a software that is exactly what your customers want, or a software that makes your software better. There's all kinds of opportunities. But one of my favorite quotes is that success happens when preparation meets opportunity. And being prepared by financially having the money you need to take advantage of those opportunities is important. Because you and I both know as entrepreneurs, there's opportunities all over the place all day long. But the question is, can we take advantage of those? Do we have the money? Do we have the energy? Do we have the bandwidth? So never miss out on opportunities because you don't have the money. Make sure that you go and build your business credit to have these credit lines that help make your business more valuable. And then get credit lines. Whenever rates are low, whenever it makes sense, grab a credit line, grab a loan. Last year before rates went up, we got all kinds of money from SBA. We didn't even need it. The money's still sitting in accounts for us. We don't care. If we can get money and it's cheap, we're going to get that money. So again, you should always be on the lookout for good types of financing. And whenever you can get that, credit lines at 0%, business credit that helps make your business more valuable, other types of loans that may have a small opportunity for you to take advantage of it, make sure you do that, because that puts you in the perfect position to take advantage of opportunities. And that really is the best way to be able to complete your journey to better money. So that being said, I'm going to go ahead and wrap up. We talked about a lot of stuff today, and to kind of do a quick recap, some of the things you want to do. You need to always be innovating. People are always going to try to steal your lunch. With the minute you find, like, look at us. When I got in the business credit space, nobody was in the space. Nobody was in the space. It was astonishing to me. Now everybody's in this space. So if we just sat with our original software and did nothing, we'd be dead. But because we keep innovating and keep becoming the best at what we do, nobody ever can catch us because we have so much leeway. But we never stop thinking that everybody else is trying to take us out. And that's the way you need to be thinking. Always be innovating. Making sure that you're also coming in and that you're looking for that blue ocean. Where can you expand your market? Where can you go to sell your products and services, the areas that you're not, that your competition hasn't even thought of yet? Upsell, downsell, cross-sell. Has many things as you can sell to your customers you should be, because that is the key to increasing your profitability. Your prices are too low. Get the book, Confessions of the Pricing Man, or any other look into the science of pricing, and make sure that you give your customers choices for prices, and just consider raising your prices to see what happens, or come up with another product or service to add to your arsenal that gives people a choice that's more expensive, and see, you'll be astonished how many people choose the upper price product. It'll show you how much money you're leaving on the table. Collaborate with people, other people that have the same avatar, even if they sell different products, services, different industries. Collaborate with them, because oftentimes your audience wants what they have, their audience wants what you have. Just by collaborating, it's a free way to get in front of a lot of extra people. And make sure you're also investing in your employees, knowing you have the right incentives to motivate them, knowing you're using DISC assessments to find the right employees, the right training and culture to make sure you retain them, and most importantly, make sure you have access to the money you need through credit lines, through loans, to be able to grow your business as well. So that being said, I'm going to wrap up. Thanks for tuning in today to learn the journey to better money. Make sure you also, and again, the Amazon book we just put right there in the channel as well. If you haven't already, make sure you like and subscribe, and keep your eye out for our next training where we'll talk about more cool ways to get the money you need to start and grow your